Your World at 10. Now, the last 2 weeks have seen many companies raise capital, but not via QIPs, which was the flavor of the last season, but via Global Depository Receipts or GDRs, and one company even did an ADR. So why has this route become a favorite amongst companies? And really, what is the response like from institutional investors across the world? Well, we have with us Sumant Sinha, Chief Operating Officer of Suzlon Energy. We just closed a GDR issue last week of a little over $100 million and also did $100 million almost of an NCD. Sumant, thanks very much for joining us. What's this new trend of GDRs versus QIPs? Why are companies preferring to do a depository receipt issue as opposed to raising money through a qualified institutional placement?
Menika, I can only comment as regards us. In our case, we really did not have the enabling resolutions in place to do a QIP, and so therefore we had to go forward and do a GDR, which is something that was possible from a regulatory standpoint. So it was really just that. There was nothing else beyond that. I think if you look at GDRs versus QIPs, you might argue that there is more broad-based interest in QIPs than there is for GDRs at this point in time. So it might just be a company-specific thing, which is really more of a regulatory issue than anything else.
Okay, in fact, a lot of people, bankers that I was speaking to, Sumant, also told me that, those that had QIP approvals from last year, preceding to the time when SEBI changed, let's say, the pricing guidelines, are preferring not to use those QIP approvals and instead are going the GDR route. Do you see, some rationale there?
No, to be honest, I can't. It appears to me that the QIP instrument is a very flexible one, and you can pretty much address the investors that you need to. If you were to do a ADR, that's a different matter because that is probably listed on the US stock markets and probably broadens the base of investors to some extent. But between a GDR and a QIP, I really can't see that much of a difference with respect to the investor base. And the GDR has a bit of a lock-in issue involved as well, whereas a QIP does not. So on the other hand, not all investors can buy into QIPs. So there's a little bit of a trade-off between the QIP and the GDR. But I think all in all, it really is a question of which instrument the company has regulatory approvals for. I think there's not that much in it between the two, to be honest.
Okay, all right. So let me ask you one final question on that comparison point of view then, and that is that, like you said, right, it broad base is the investor base. So was there some sense that the appetite amongst the regular institutions that were or are usually part of a QIP was waning to some extent, and therefore you needed to reach out to a lot of investors that otherwise didn't have access, let's say, via a QIP, but would have access via GDR to invest in companies like yours?
I wouldn't really say so, Menika, because, the difference is not that large. And ultimately, there are very, dedicated investors who invest in India, and they have the facility of investing either in GDRs or in QIPs. And ultimately, they form the core part of the investor base. So I think, to be honest, that to my mind, there isn't that much difference between the two instruments, frankly.
What's the appetite looking like, Sumant? You all wanted to raise more than 108 million, but you all settled at 108 million. Is there a comment on the appetite or the kind of investors you were able to attract? Or generally speaking, right now, since we've been through $3 or $4 billion of QIP raising and another $2 billion almost between the Sterlite ADR and last week yours and Tata companies doing GDR issues. So are you seeing any sort of reduction in appetite?
Well, I can't speak to the general trend because our intervention in the market was really just a one-off. But I think in our case, there were two issues. One is that I would agree to some extent the fact there is a lot of paper coming into the market. So to that extent, there is some impact on investor appetite. But in our instance, the other issue also was that we were doing another convertible transaction as well. And so between the two, we ended up raising the amount of money that we were looking for at that point in time.
So you weren't looking for more than 200, is it?
I would say so. I think there are lots of things that are going on and various discussions we're having internally. So we were actually quite comfortable raising the kind of money that we did.
Why did you raise 100 via GDR and about 98 million via your NCD? I mean, why the breakup? Can you explain that to us?
Well, yeah, sure. Actually, when we did our convertible restructuring some time ago, at that point we had agreed with the bondholders of our previous convertible that in fact we would, upon their option, issue a convertible on certain terms and conditions. And we had given them a certain period of time in which to exercise the option. And they chose to do so. And that is why we went ahead and did the convertible at the size that we did. And it actually just happened at the same time that we were doing the GDR. So that it actually allowed us to really divide up the fundraising between the two.
So what's it looking like? I'm guessing that, Sumant, there's likelihood that you will probably want to raise more money in the course of the next 3 or 4 months. Do you think the environment is likely to hold with the rush that we've seen right now of paper, as you pointed out? What is the market telling you in terms of being able to raise funds, let's say, in the latter part of this year?
You know, Menika, it's very hard to say, to be honest. I think the markets are doing well right now. One sees foreign investors coming back into the Indian market. Markets are looking like they're doing well. Question is, how long will this persist? It's hard to say. Hopefully, it's more sustained as opposed to volatile. And if that is the case, then we'll see more Indian companies go to the market and raise funding. And hopefully that will be supported by the funds flows into the country. So we are hopeful and positive that things will continue to be as the way they are. With respect to our own fundraising plans, it really depends upon how the market unfolds. We don't have any specific plans at this point in time. So we really play it by ear. We have a lot of things going on at this point in time. It also depends upon how our core business markets develop, what sort of business we end up doing, and what our requirements are. So we haven't really taken any sort of conscious decision at this point in time.
No conscious decision to raise any money in the next 2 or 3 months, even though you have an enabling provision of up to 5,000 crores for the year, right?
Yeah, that's right. And that is something that we do every year at our board meeting, just to make sure that if there is any need for any fundraising, then that is something that we can do quickly. So there is no specific plan, as I said, at this point in time.
Sumant, do you get the sense that this rush of paper might sort of, flood out appetite altogether? Is there any way to tell that? I know you've part answered this question in, earlier as well in this conversation, but I'm just trying to gauge whether there is more ability for companies to go out there to the market and raise money, or are we coming to the end of the rope, so to speak?
I don't think that we're coming to the end of the ropes, because I think that the crash that we saw in the market after the budget seems to have reversed itself. There's a lot more optimism about the Indian economy. I think liquidity has always been there in the international markets. It has just been a question of are they seeing this Indian market developments on a more sustained basis or not? And it looks, especially if I hear the comments on your news channel, that in fact that is beginning to be the case. And therefore, one would hope that there isn't that much of a rush from Indian corporates, and don't forget the government disinvestment program as well, that in fact it ends up completely sucking the markets dry, and there is some left for further flows into the secondary market as well. So I suspect that there will be a fine balance between the two, and I think that as long as there is appetite, there's a lot of pent-up demand, I think, among Indian corporates, and so they will continue to access the markets whenever that is possible. So I think we'll continue to see issues going forward.
All right, Sumant, thanks very much for joining us. We wanted your perspective on the capital raising environment right now, and thank you for your time and your perspective on your world at 10.